All right, well, hopefully everybody can see the screen here.
Yes.
Well, I appreciate the opportunity to present the results of the fiscal year 2022 audit. I know it's a little bit later than probably everybody expected, but just a little background on the timeline. We started the audit pretty much back in October of 2022. Obviously ran into some issues with certain portions of invoicing and other areas that needed to be fully reconciled. And from that time through pretty much March of 2023, those items were corrected, and we issued the report to the Office of the State Auditor in April. And I think it was just last week the State Auditor finished their review of the report, released it, and as of today, that report is available online from the State Auditor's Office website. So that report is public information, and we're here today to present the actual results of the audit. So I have here a copy of a PowerPoint presentation that'll just walk you through some of the results in the fiscal year 2022 audit. And here on this first slide is really just our responsibility as the Commission's auditors. Now, really try to break down the audit into these three phases. And really the primary responsibility is to provide an opinion on whether the Commission's financial statements are materially correct. Now, we audit the Commission both at kind of an overall level, which includes, the general fund, the capital fund, CTO, and HPA. But then we also audit each of those funds individually also. So really, in a sense, we give 5 opinions, one on each of those different funds of the Commission, and then on the Commission as a whole. Now, in our reports, we provide reasonable but not absolute assurance. We don't audit every single transaction that flows through each of those funds, financial statements, its bank account, and whatnot. But really, we perform what's called a risk-based audit, which is where we work to identify risks that could impact the Commission and each of those individual funds. And once we identify those risks, we design procedures that are responsive to those risks. Now, the second part of the audit is to obtain an understanding of your internal controls, really to help us plan the audit. But we don't provide an opinion on your internal controls. However, if we do identify any weaknesses in your internal controls, either in how they're designed or how they're being implemented, we would communicate that to you. And then third, we also perform testing on your compliance with certain state statutes that apply to the Commission. So we look at the New Mexico and Colorado statutes that apply to the Commission, and we design procedures that test compliance with those state statutes. So really those 3 areas, auditing the financial statements, obtaining an understanding of your internal controls, and then testing compliance with these state statutes really summarize the 3 parts of the audit. And really the overall audit results are shown here on this slide, and they correspond to those 3 parts of the audit. Now, as it relates to the audit of the financial statements, we issued an unmodified or a clean opinion ultimately on the Commission's financial statements. And it's really the highest level of assurance that we can provide as auditors. Now, what that means is that at the conclusion of our audit, we feel that the financial statements of the Commission, both at each of those individual fund levels, as well as for the Commission as a whole, are materially correct. Now, it doesn't mean that there were no findings as part of the audit. It doesn't mean that there were no adjustments or corrections made as part of the audit, but it just means that we feel the financial statements are materially correct. The second part of the audit, which relates to internal control, I mentioned we don't give an opinion on your internal controls, but if we identify weaknesses, we would communicate those to you. Now, we did identify 2 material weaknesses as part of the audit, as well as 1 significant deficiency. Now, material weakness is really that highest level or most severe type of deficiency we can report as part of an audit. And a significant deficiency is much less severe, but still something that should be reported to the Board of Commissioners ultimately. And then related to our testing of compliance with state statutes, we did have one non-compliance finding reported. And there were two non-compliance findings from the fiscal year 2021 audit that were resolved as part of the 2022 fiscal year. Now, you'll notice some page numbers throughout this presentation. If you want to see the details supporting any of this information, you can go to those pages in your financial statements and they'll provide more information. Now, I mentioned the four findings that were reported as part of the fiscal year 2022 audit, and they are summarized here on this slide. Again, if you look at the page numbers in your report, you can see the more detailed information on each of these findings. Now, the two material weakness findings that were reported relate to account reconciliations on page 50 and the appropriation invoicing process on page 51. Both of these really relate to the adjustments and corrections that were made during the fiscal year 2022 audit. Again, we started our audit in October, and really from that date through March, April 2023, there was a lot of back and forth on balances in certain accounts and making adjustments to certain accounts. And a lot of those corrections were actually caused by the appropriations that were being invoiced or not being invoiced. And really these two findings relate to that entire process. Now, our recommendations in both of these areas, or really in the first area, is just to implement a monthly and annual reconciliation process. And then on the second part, just develop policies and procedures specific to tracking, invoicing, and collecting on the available appropriations that are maintained by the commission each year. There was also a significant deficiency on page 52, which relates to the use of purchase orders. Now, your policies and procedures do require the use of purchase orders for most purchases, but there were some purchases that we tested this year that didn't comply with those policies and procedures. I know one thing that I believe you all are discussing today are some of the changes to your policies and procedures, which probably relates to the use of purchase orders and other things. But really, our recommendation here in this area is to follow those policies or update your policies to make sure that you are specifying when purchase orders are required and then ultimately implement those policies. And then the only non-compliance finding we had for this year related to submission of the audit report to the state of New Mexico past the November 1st audit deadline. Each year you are required to submit the audit to the Office of the State Auditor by November 1st. This year obviously it was submitted at the end of April, so that necessitated a late audit report finding this year. I mentioned that there were two findings from fiscal year 2021 that were resolved as part of the fiscal year 2022 audit, and they are shown here. One of them related to compliance with these local government budget compliance rules. In 2021, both the general fund and CTO overexpended their budgets, and those were resolved in fiscal year 2022. And then last year, related to the Public Money Act, you have to deposit amounts received within 24 hours of receiving those funds. Last year there was one issue that we detected as part of the audit. This year we didn't have any issues with those deposits being made timely. So that was also shown as resolved this year. So with that being said, the rest of this presentation then will walk you through some of the numbers in the financial statements, and we put these in graphs to provide some context with the previous 3 years. You'll notice here in blue is the fiscal year 2022 information, and off to the far left you see the total assets of the commission. Now this includes both the commission's general fund as well as the capital fund, CTO, and HPA. And you'll see the total assets increased by about $6 million in fiscal year 2022. Now, when you look at your liabilities, they also increased by about $3 million. And because your assets increased by so much more than your liabilities, your net position off to the far right, which is really the difference between your assets and your liabilities, increased by about $3.5 million. Now, when you take your total assets and you break them down into your different types of assets, they're shown here on this slide. Now, your capital assets off to the far right are the most significant asset of the commission. And during fiscal year 2022, you see that pretty sizable jump in your capital asset balances. Now, you had new asset purchases of about 3.9, almost $4 million during fiscal year 2022. And most of that was track improvements, locomotive improvements, car improvements. But those $4 million of improvements were offset by the depreciation of your assets during the year. Off to the far left, you have your cash and investments, and you see your cash and investments actually did increase by about $2.2 million. Now, you'll see each of the last 3 years there has been a drop in your cash and investments, but in fiscal year 2022, you saw a pretty sizable jump. It was caused by a few things. One, you received about $1.7 million in insurance proceeds from the Osier fire that occurred during the year. Those insurance proceeds were received toward the end of fiscal year 2022. You also received those employee retention credits of about $300,000 during the year. And then you also received your fiscal year 2023 special appropriation from the state of New Mexico right at the end of 2022. And that amounted to $3 million that was included in your cash at the end of the year. So those three really made up the big increase in your cash and investments. Otherwise, you also have receivables here on this slide of about $3.3 million. And again, you'll notice that increase or that balance is a lot larger than it has been the last several years. That $3.3 million is pretty much split between the state of Colorado as well as the state of New Mexico, and it's really just amounts owed to the commission from its outstanding appropriations or its outstanding invoices on those appropriations. Your liabilities are shown here on this slide, and your largest liability at the end of 2022 is called unearned revenue. That's really made up of any unspent appropriations, which we mentioned you received that fiscal year 2023 appropriation right before the end of the year. And that's really the cause for your large increase in unearned revenue. As long as you spend down those appropriations on allowable activities, that unearned revenue goes away. Also included in that unearned revenue are prepaid classes as well as prepaid ticket sales. Those are included and really make up the balances in previous years. But again, that big increase was because of that appropriation being received prior to the end of the fiscal year. You also have payables and payroll liabilities here to the far left. You'll see a big jump in that payables and payroll liability balance. Most of that is because of a large invoice that was owed to ServPro at the end of the year, which really amounted to almost $1 million. And that was paid after the end of the year, but that made up the big jump from last year. And then you also see your PPP loan, which was recorded under CTO. You issued one PPP loan in 2020, another one in 2021. And in fiscal year 2022, both of those loans were forgiven. And because of that, you see that PPP loan balance drop to zero at the end of 2022. Now, when you look at your net position, which you can also think of as your equity or your net worth at the end of the year, it's shown here on this slide. Now, your net position is broken down between the portion of your net position invested in capital assets as well as any unrestricted net position. Now, the portion of your net position invested in capital assets is separated because while those assets do contribute to your net worth or your net position, they're not available for future spending unless you were to actually sell off or dispose of those capital assets. So that portion of your net position isn't really spendable unless you sold off those assets, and that amounted to about $18.3 million. Now, if you want to think of the purely unrestricted or the reserve of the commission at the end of each year, that's shown in that unrestricted net position, which at the end of 2022 amounted to about $2.2 million and is the largest it's been in the last 4 years. Now, when you break that net position on the previous slide down by fund, it's shown here on this slide. Now, the commission's general fund makes up about $900,000 of that balance, and HPA makes up about $1.1 million of that balance. Aside from that, your capital fund has about $26,000 of net position, and CTO, which last year had about a $628,000 deficit, now has about $180,000 positive net position. Now, most of that swing was caused by the PPP loans. You spent the PPP loans last year, and really in 2020 and 2021. This year, your PPP loans were forgiven, and that caused a positive swing in your net position during the year. When you look at your revenues, they're shown here on this slide. You have charges for services, which is mainly made up of CTO and HPA and ticket sales. You'll see those charges for services did drop in 2021. That's really the year that COVID impacted your operations the most out of the last 3 years. But in 2022, you see those charges for services increased to about $4.7 million, pretty close to pre-pandemic levels for CTO. You also have your grant revenues here in the middle of this slide. That's made up mostly of your New Mexico and Colorado appropriations, both on the operating side and the capital side. And those grant revenues were about $2.7 million in 2022. And then off to the far right, you have any other revenues that don't fall within those two categories. Now, normally, your other revenues would be pretty small, but because of the insurance proceeds from the fire, the employee retention credits, as well as the forgiveness of the PPP loans, those all make up that other revenue in fiscal year 2022, and it's why you see such a big spike in 2022. Now, your total expenses are shown here on this slide, and again, we break your expenses down by different fund within the commission. Your general fund had expenses of about $600,000. The capital fund, which is made up mostly of capital improvements, jumped to about $4 million in fiscal year 2022. You have your train operations or CTO expenses of about $4.7 million. And when you look at the expenses of CTO, roughly 40% of those expenses are payroll related. You also have other operational expenses and administrative expenses that fall in there. But like I said, most of that is payroll and payroll related expenses. And then you have other expenses off to the far right within HPA. And those HPA expenses are right around $100,000 each year. And then lastly, when you look at the overall change in net position, you can also think of this as the net income or net loss for each year. It's shown here on this slide. You see the general fund off to the far left has generated positive net position each of the last 3 years, 4 years really. You see the capital fund here in the middle of this slide. Back in 2019 and 2020 actually incurred losses in 21 and 22. Though you should expect to see pretty much break-even information for the capital fund each year because a lot of those expenses you incur are reimbursed or covered by your appropriations. You have CTO here in the middle also, which we mentioned in the last couple of years, CTO was the most affected by the pandemic. And you did use PPP loan proceeds in the previous years to cover a lot of costs. But those PPP loan revenues weren't recorded until 2022 when those loans were actually forgiven. And that's why you see that swing in 2020, 21, and ultimately in 22. And then off to the far right, you see HPA. And because ticket revenues were down so much in 2021. You saw the drop in HPA revenues and ultimately net position in 2021. But really, each of the other 3 years, you've seen positive net position within HPA, and that increased about 157,000 in 2022. So that was really everything we wanted to present as it relates to the fiscal year 2022 audit. Obviously, if there's any questions from the commission, I'd be happy to go through them with you now. But if you have questions after today's presentation and want to discuss anything, you can call me on my office or cell phone or shoot me an email, and I'd be happy to go through any questions with you. So thanks again for having me.
Questions?